Welcome to Crypto Pulse Weekly. I think it's 7 o'clock, so we can hit the ground running. Welcome to all those on the Zoom call. And welcome to the guys on Instagram. Hope you've had a nice week. I know it's been an interesting, probably turbulent week for Bitcoin and for guys who are into futures trading. But yeah, other than that, I think it's been a fantastic week. It's been a bright sunny day here in London, and it looks like the Black Friday discount day as well. So let's get started. Like we usually do, we'll go through the market fundamentals. I'll be brief today because on the crypto drip aspect, I really want to go through some fundamental factors that are driving the markets to sort of allay the fears of people who are new to the markets and probably scared of the volatility they're witnessing. Just to make you know that, well, there's nothing new. It's par for the course, especially for Bitcoin in a bull run. So it's not anything unexpected. It might always come as a surprise when it comes, but it's not out of place. So with that in mind, we'll start today's session and we'll go through the works. We'll talk about the market update, talk about the things we're seeing in terms of technical analysis of Bitcoin, which is the primary driver of the cryptocurrency market cap. And then we'll talk about some knowledge sharing session, which today would mainly focus on why we have these dips, what it means to the overall price progression, and how it affects the bull cycle in relation to previous or historic price action on crypto. So let's get started. In terms of market updates today, it's no news that we hit about a 26% drop after the 65K all-time high. For people who joined the markets in the last 6 weeks, that would have been quite disastrous looking. But if you cast your mind back to January, when the price had come all the way from like 20,000 to 40,000, and then we had a 30% dip, and everybody was crying and screaming and everything, and people are like, oh, what's going on? Why did the market crash so bad? And there was a lot of noise about the end of Bitcoin. In fact, I remember very vividly there was a news carried by, I don't remember if it was Forbes or CNBC at the time, saying that now we have entered the bear market. That was in January, by the way, and Bitcoin had just done 100% gain in less than 6 weeks, and then took a 30% correction. And then the press was all over it like it was the end of the world. And I remember thinking then to myself that, this would have been a very fantastic opportunity. But I think I was leveraged, I was exposed on leverage then. So I didn't like the sudden drop. But other than that, from that drop in January, anybody that bought into alts from the drop early in January, to let's say mid-March, I would say most of the alts did anywhere between 200 to 1,000% at the minimum. Most of the alts, and you can go back to your prices, you can go back to your charts. From people that have been with me since January, or people that have been with us since before this year, you can go back to check the prices and see that between the time that Bitcoin dropped and the market seems to have crashed after that gain to 40,000 all-time high, and May, when we were already sitting above 50K, we did close to 10x, generally speaking. And it was after that 40K, 30% drop to 20, I think it was 27,000, that the market cap of Bitcoin went all the way to $1 trillion. So it's important to keep this in perspective, because there is no commodity or there's no assets in the market that goes up in a straight line. It never happens. If it goes up in a straight line, then it's a Ponzi scheme. It never happens. No asset, no commodity goes up in a straight line. And that includes gold, silver, oil, metal, foodstuff, anything. It always goes up in the staggered version. And that's what we're seeing here. So for every 3 step forward or 4 step forward, you can expect 1 or 2 step backward, naturally speaking. That's what happens on the market. And because this particular one seems to be hard, let me use that word, because it seems to have dropped just on the cusp of a very significant gain. So we have sat below 60K for a while, and then all of a sudden we jumped to 65, and then from 65 it just crashed. It looked like, so many things were wrong, but two things you have to keep in mind. The market makers will always control the market in the short term. And that's what I told somebody today, that when you're getting angry in the short term, you need to take a step outward and look at the long term, because in the long term, the price sort of finds its level. In the short term, the market makers can do all sorts of magic. And that's the kind of magic we've seen in the last 2 weeks. So what happened is it went to 65K. 65K means new all-time high. Bitcoin had never sold for 65K before. So everybody that bought Bitcoin before 65K was suddenly in profit. So the miners felt, well, another good opportunity to sell some of our stash. And once they start selling, other people start selling as well. Because of that, you sort of have a snowball effect where new joiners are quick to sell. And like they're wondering, why is the market crashing? But the market is not crashing. The market is behaving exactly the way the market should behave. Just like the waves of the sea. Imagine you went to the sea and everything was calm. I mean, we're talking the ocean, not even, a lake. You went to the ocean and everything was calm. It would be very abnormal. It will mean that the ocean is frozen, or you are probably on the North Sea. Because ideally, if you are somewhere around the equator, you are, from a physics standpoint, you are the area where you have the most centripetal force on the ocean, where you expect the ocean to move because of the rotation of the Earth. So the ocean is not expected to stay still. So in the same way, the market is not going to stay still. If the price grows up, it will always come down. And there's a Yoruba proverb that says that, I don't know what that means. So it says the lala that goes up is the one that comes down. It's like a law of gravity. Everything that goes up must come down. So yeah, the blood on the streets is just basically because people are not expecting it to happen over the weekend, because last weekend, and then people are not expecting it to take a further plunge. But I think people blaming it on the Biden proposal for capital gains tax is really just looking for an excuse, because really, it's still a proposal. It's not even been put to the House. So it's going to take a while to debate. And for all you know, the Wall Street guys might go to the House and block it. I mean, they have that kind of power. So attributing that to, the tax proposals in the US, it's really premature. It's just like looking for something to tie it to. Really and truly, there's nothing wrong with the market. The market is behaving normally. And like I will show you at the end of today, it's still very much in character to what you'll expect the market to the performance of the market. So yeah, I mean, people who join in February will be thinking, oh, but then he said we're expecting 4 to 5x on our investment. Yeah. The fundamentals, the technical analysis are still in place for most of the altcoins. But what has happened is this Bitcoin drop has sort of truncated prematurely the alt season. We expect that over the next 2 to 4 weeks, the market will just range for Bitcoin, which will allow the alt season to progress. And once that happens, like I will show you on our technical analysis, you will see that we've not really lost value in terms of altcoins. We've actually gained more over the last 1 week in terms of altcoins, as opposed to the overall market cap. So the fall and the blood on the street is basically just the market behaving in an expected manner. And I think what has happened is the big whales and the market makers and the miners have decided to take the initiative to dump on the market before everybody. And if you witness a dump during the weekend, it's most likely the miners. If you witness a dump during the weekday, it's most likely institutional dumping. And so we've had both of them. We had the first one on Saturday night, Sunday. Then we had another one overnight till today. So it's expected. I was telling someone that we've not done 30% drop yet. And the person was like, oh, well, my account is already like down by 40%. So I said, well, your account has a lot of alts in it. And when you have a sharp drop like this, alts usually take a lot of heat. But you need to bear in mind that when the market starts pumping again, alts will generally pump better than Bitcoin. So I know it's not palatable to look at. Simple advice: don't look at a portfolio. If you looked at it in the morning, just leave it, let it rest for a few days, so that you don't start pondering about why didn't I sell? Really and truly, the people who make the most money in a bull market as people are patient enough to hold and understand that the noise of the market in the long run does not affect the price progression. So I'm going to come back to that. I'm going to come back to that much later. But generally speaking, short-term sentiment is bearish. Further, expanding on this Bitcoin crash, quote unquote. I had two quotes that are interesting. I found very interesting. One on social media, one in the news. The one on social media was on Twitter. And this guy I follow called Wolf of Wall Street, and he starts by citing, the Lord's Prayer in a crypto fashion, and people were adding various connotations to it. Give us this day, our daily dip, and forgive our stop losses, and those who take profit against us, lead us not into over leverage position and deliver us from FOMO. For now is the uptrend. I found it very interesting, so I just couldn't resist. I couldn't resist copying it. But for most people who are already on the market, this is not a new thing. This is just one of those turbulence, quote unquote, that you witness in flight. It doesn't mean you're not going to get to your destination. And the other quote I got was from Crypto Telegraph, and it was an analysis of the events on the blockchain. So because Bitcoin's blockchain is a publicly available ledger, companies have built all sorts of analytics to try and decode what's happening per time on the blockchain. And this insight is very, very key, and it sort of corroborates what I'm saying. So what this insight is saying is that while the 1 million plus people keep buying the dip, no matter what, it says the 100K to 1 million guys have set lower highs and lower lows on their order flow, meaning the people who have their stash of Bitcoin worth more than $1 million. That's people who are sitting on more than 20 Bitcoins. They are buying the dip at any point in time. Anytime the price crashes, they increases their stash without ever selling. And how do they know this? They group those addresses based on the amount of Bitcoins that they have. And they notice that since the beginning of this bull run, those addresses have not sold any Bitcoin. But each time there is a drop, they buy the dip. On the other hand, the guys below them who are between, 1 Bitcoin and 19 have been, selling and buying at every opportunity, as if they are day trading or almost swing trading. And this tells me something, that the people who are real, accumulators of wealth understand this principle of compounding and understand the principle of long-term interest on any particular asset class. So the big guys are not selling their Bitcoins. It's we, the small guys, that are selling our Bitcoins at the slightest shake in the market. So whatever, we might have attributed this fall to, what I'm saying, and I was having a discussion with a friend earlier today, and he was saying, we've missed the opportunity to buy the dip again. I said, well, you've not missed the opportunity to buy the dip. I know that as you're talking to me now, you still have Bitcoins that are sitting around, that you've not missed the opportunity to buy the dip. You can't time the market. You can only trade what is before you. And that's the important realization that we need to come to, that you only deal with the hands you're dealt. So if you have a market drop, it's time to buy. Like someone was saying today, that its greatest lesson is to always buy when the candle is red. And I was telling some other guys that I literally changed my bear candle to green, so that it triggers a subconscious emotion that that's the time to buy and not the time to sell. So when the markets are down, it's a discount. Most alts are 50% discount from where they were 3 weeks ago. And Bitcoin is 2026 at the lowest when it was 40 something earlier in the morning. I think it was at the lowest was about 26% from the peak at 65K. So really, we've not really had the characteristic Bitcoin bull run dips of 40 and 50K and 50% dips. So I think this is a good buy opportunity. Like someone asked me if it was a good buy opportunity for Bitcoin. Superb and stupendous opportunity for altcoins. If there's any word like that, because most altcoins are doing 50%, 60% of their current highs right now, which means if let's take a good example. Let's take VeChain. VeChain is a good coin. I think I've talked about it before. VeChain is about 50% off its real price now. So if you bought now, in another few weeks, you'll get 100% because it's just come off its recent high. And the only reason it's come off its recent high is because Bitcoin has lost valuation. And Bitcoin losing valuation is just a temporary correction. And for anyone who's been investing or trading, you understand that the market will always take correction. No matter how sweet it gets, there will always be corrections. And like so many people have said that, but what will happen at the end of this bull run when the institutions are coming in? Well, the institutions are coming in not only to hold for the long term, they're also coming in to sell at a convenient period. So there will always be periods where there will be a sell-off. The period where there's a sell-off is an opportunity to buy. A way to position is never buy until you have an opportunity like this. You will miss some other shorter time opportunities, but at least once in a month for the next 4 or 5 months, you are likely to see this kind of scenario play out. So if you get an opportunity to buy once in a month and double your money, simple trading strategy. Very simple. I mean, if you're a day trader or swing trader, it's a very simple strategy, provided your patience and your greed will allow you to hold your guns and not enter prematurely. But really and truly, I think Bitcoin is well positioned for a good correction. And another thing I saw was that the weekly relative strength index, which is a technical oscillator tool, shows that we're getting into oversold region. For the non-technical people, what it means is that the price of Bitcoin is getting oversold, meaning the sell pressure and the sell momentum is losing steam. The last time that happened, just for context, was September last year. When that happened in September last year, at the end of September, when the market suddenly crashed and the DeFi and altcoin boom suddenly came to an end, Bitcoin consolidated for about a month, and then it started picking up in October and landed us in 40K, just for context. So the last time this happened, we had 4-week consolidation, and then we had a boom. Like I will show you later, anytime you have this kind of correction, you can expect anything between 50 to 150% catapult in price. I think we're not having, so we've not even had any of those significant catapult in price, except the one from December, which was 100% from 20K, because the market valuation is getting significantly bigger. And what do I mean by this? The last bull run at the peak of the markets, we were sitting on maybe like 700 and something billion. And at the beginning of last year, we were sitting about 200 and something billion in market cap. Right now, it's 2 trillion. It's dropped about 300 billion in the last 1 week. I mean, give or take. So we're about 10 times the market size at the beginning of last year. So we're not seeing that hike in price because the market is getting more voluminous than it used to be. But from where we are now, I'll still talk about the technical analysis of the price, but I think from where we are now, which is dangling around 50K, if we don't dip at least one last dip to 40, 43, then we might just consolidate at 50K and 50K and above for a while, because we've actually stayed in range of 50K for more than 4 weeks before going to 65K. So I don't think there's any fear or disagreement between buyers and sellers that 50K is a good level. But I don't think there's any significant I don't think there's any significant price movements for the next 2 weeks for Bitcoin at the moment. The worst it can be is to get to 42. Some people say, well, it can get to 40. I don't think it can get to 40 because there was a lot of institutional buying at 47,000. So if there are institutional buying at 47,000, it means that there are still others that are sitting at 47,000 waiting for the price at that level. And these institutions buy in billions. So I don't see how the market is going to be able to break that buy wall. But having said that, let's go on. I had this news since last week, but I didn't take it last week, which was the largest insurance institution in Switzerland. I say they'll start accepting Bitcoin. The reason I'm bringing up the news is not just because they want to start accepting Bitcoin, but what I think is going to happen is that they're already preparing or developing insurance packages for blockchain and cryptocurrency as a whole. And like someone said earlier in the week, that whoever comes up with this first is going to make a lot of money. So if there's anybody on the call who's into insurance, I'm also putting the word out there. Please contact me and see if we can build a solution for cryptocurrency insurance. I think it's a niche area, and it's completely unexplored right now. So if anybody knows about insurance, please, I want to talk to you. Really, I think it's an opportunity, and there are various things that can be done. But I don't know how insurance works, especially in these climes. So I'll need somebody with industry experience and functional experience to weave around it. But I think there's significant opportunities here, and that's why I carried the news. Last week I was telling you about Dogecoin, and yeah, I did mention then that you are essentially trading on your own, and that you should only trade money you can afford to do. I think we've seen what has become of Bitcoin and Dogecoin in the last 1 week. More interestingly is the other ones, the ones that people don't know about. So everybody knows about Dogecoin, but these ones, I'm sure many of you have never heard them before. So you have Shiba Inu, Akita Inu, Podo, you have Nyan, you have Leash, you have Pikachu. I have quite a number. You have like 5 or 6 others that are meme coins for dogs, and they're largely on the DeFi market. They're mostly on DeFi market. Very few of them, like Shiba and Akita, and probably Podo or Leash, are on some centralized exchanges in Asia. But for the most part, they're on DeFi. And when I mean they're on DeFi, it means they're not available to centralized exchanges. And that makes the risk premium like 100% higher, because it means you can't hold the exchange anyway if you lose money on Doge, because everybody knows it's a speculative product. But what people don't realize, and I think I need to mention it, for people that keep asking me about Doge, what you don't realize is that you can't win with Doge. And the reason you can't win is very simple. Unless you're going to buy Doge at 1 cent in the midst of a bull run and hope to sell at 2 cents, or maybe hope to sell at 3 cents or 5 cents, Doge has an inflationary addition of about 15 billion units or 5 billion units every year. So it's always adding to the circulating supply. So it's very, very inflationary. It's not deflationary at all. So when the what they call them now, the TikTokers and the teenagers on social media start going on about Doge getting to $1, it's primarily illiteracy and lack of knowledge of market dynamics. Because if you understand that this coin is going to add billions every year, in fact, it pumps out 10 million or so every day in the coin, then you know that it's not realistic. Totally not realistic, considering that you already has the amount of market cap it has. It's completely unrealistic. So for everybody asking about Dogecoin, you should also keep that in mind. If you see Dogecoin going up, you know that it's not a good time to buy. But if you're really interested in Dogecoin, right now might be a good point to buy. It's at 20 cents. I think it'll probably drop lower when the new hands see that this thing is not looking nice. So for all the Dogecoin fans, trade with money you can afford to lose. But yeah, good opportunity to buy. But you shouldn't be hoping to hold it for more than 4 weeks. Somebody asked me a question that can one sell at a high and later use the proceeds to buy at a low. How are you going to find the low? That's the question I ask. So someone says, okay, but Demi, why didn't you tell us to sell 2 weeks ago when the market was doing so well? I didn't think we had reached our targets. That's the simple answer. I think we are still far from our target. So we have a correction on the way to our target. It's all right. A 30% correction or 50% correction on the way to 400% or 500% is, I think it's a fair sacrifice to pay. So you can buy, you can buy at a low and sell at a high, but there is no guarantee that you get the timing right. The only thing I can tell you now is buying now is actually a good opportunity because this is a major correction. This is a correction of almost 30%. So what it tells me is that from current price, which is around 50K, we at least can easily get to 70K, 80K, or even 100K conveniently without backing down. That's what this correction tells me. And it also tells me based on market dominance, Bitcoin dominance, that we are setting up for a very massive altcoin season. And I'll show you that. I'll show you that shortly. I talked about Ethereum's all-time high last week, and the Ethereum Bitcoin charts is currently not doing badly as well. So this is one of the indicators that altcoin season is still very well preserved. Yes, I put this milestone alert that this is the first true correction of 2021. And the reason being that this is the first time we actually get on a weekly basis that we actually get into a technical oversold region on the charts. And what that tells me is that, yeah, the market is ready to take up and start moving up again. So in terms of overall market, that's where we are with Bitcoins. And of course, many people have noticed, maybe 30, 40, 50% drop in their portfolio value. All that is natural and is expected. So as I said, you will always have ebbs and flow, meaning there will be times that the tide will be high, there will be times that the tide will be low. People asking about Kusama. Kusama has gone as high as 586. If you sold at 586, good for you. It might be a strategy to increase your bag. But if you have a longer term perspective, that Kusama might be selling at $5,000 or $10,000 before the end of this year, then depending, I don't know what your financial situation is, so I can't give a financial advice on whether you should sell or you should buy at a dip. But what I know is Kusama is selling at a discount right now, like many of the other altcoins. And the technical target for Kusama is at least between $5,000 and $10,000 for the year. So from where it is right now, it's actually less than 10x. It has room to do more than 10x. From where it is right now. So really, it's a personal decision based on your strategy. Having said that, I think I mentioned it last week that we will be having a portfolio management class on the 14th of May. So for people that are interested, please indicate interest on the WhatsApp group. If you're not on the WhatsApp group, you can PM me on Instagram. We'll be having a class on the 14th of May. And basically it's to discuss issues like this. So some people have made some money, and they're wondering, should we cash out and just move on? Or, what do we do with the money we've made? So we'll be touching on a lot of those issues during the portfolio management class on the 14th of May. Moving on to, so sorry, I'm reading some text messages on the chat. Yes, I'm also dropped 50% for those that bought 3 weeks ago. Yeah, so as I said, if you know where you're going, and I won't say luckily, we are fortunate to know where we're going with this market. We have the metrics, and the figures have been tying to the metrics so far. The metrics suggest that Kusama is anywhere between 5 and 10K. So why would I worry about Kusama dropping to 255 when I know it's still going to 5,000? There is something called hindsight. Hindsight sort of gives you context. If you already have hindsight into a particular situation, it gives you context. If you get a person on a plane that's never been on a plane before, and you have a turbulence, The person might freak out, depending on how fearful the person is. The person might freak out, start throwing up, or start having seizures or anything, because the person has not been exposed to that kind of situation before. But if you have a frequent flyer sitting next to the person, the guy might probably be snoring and sleeping off, because as far as it's concerned, that's just normal rocking of the plate. But for this guy, it looks like the world is about to come to an end. But for the guy who's been flying many times, he understands the context and he understands the destination that, okay, this is part of the course. When you're on a plane, you expect some rocking here and there, but we eventually get to our destination. So in the same way, if you bought Kusama thinking, okay, Demi said Kusama is going to do 100%. Now Kusama has dropped half his value. What is Demi thinking? Well, Demi is still saying that Kusama is still going to do 100% from the time you bought it, because from where it is right now, Kusama is about 20x away in terms of price target for the year. So we're still in for every altcoins that we've given out on the WhatsApp group. All those altcoins still have their target intact. In fact, some of them have their targets moved. Let's just stay with the original targets. And I can assure you that between now, I think we're how many weeks away now? We're 5 weeks away from the end of May. Yeah, we're 5 weeks away from the end of May. Between now and the beginning of June, actually, I think we're going to have a significant altcoin season. Because what it means is that Bitcoin is likely not to go up anytime soon. I think we'll have that consolidation. The kind of consolidation we had between 44 and 60K for almost 6 weeks. I think we're going to have that kind of consolidation. And based on the dynamics of Bitcoin dominance, I think most of those capital will be sitting in altcoins and will give a lot of impetus to altcoins in the weeks to come. In terms of market cap, we've had a drop. We've had a drop of about 300 billion overall market cap. 48% of what is left is sitting in Bitcoin. 52% is sitting in altcoins. To make it more clearer, we've lost 70 billion net between Friday last week and now on overall market cap. However, we've gained 106 billion in altcoins. So what is this telling us? It's telling us that the money is beginning to move into altcoins. And when this begins to happen, you will start seeing altcoins doing astronomical prices. So for many of the people who are asking, is it a good time to buy? Any altcoin buying, it's a no-brainer. You're going to make profit in the next 4 weeks. I mean, it's not a financial advice, but it's a no-brainer because you're buying at a discount. So if you walk to, I don't know which of the, okay, sorry, I don't do designer too much. So I don't know many of those designers. So if you walk into, let's say, Burberry or Ted Baker, I think I know Ted Baker. It's one I was trying to remember. I didn't remember. I can't remember the name. It's Central London. And I know people mention it a lot, but I can't remember the name now. But it's one of those high-end. If you enter there and they sell, there was one of these social media influencers, and I went there and wanted to wear a particular jacket. And he asked for the price, and he said the price was £5,000. So the guy was screaming his head off. So if you walk into that place and he said, okay, for this jacket today, we're selling at £2,500. That's a 50% discount. And he said, okay, for today only, you can have it for, like they say, clearance or savings clearance when you enter the store. So you can have it for £2,500. It means that if you go there tomorrow or if you go there next week, you're going to meet it at £5,000. So what we have right now is a discount on the market. Agreed, people are already invested in the market, but there is a principle called dollar cost averaging. So if you're a long-term investor, your goal should be to dollar cost average on your investment, meaning anytime there's a dip like this, find money to add to your position, because if you do, you would exponentially increase your profits. So let's do a simple math. I buy Kusama at 200, Kusama gets to 500. Let's say I don't sell it. So I buy 10 Kusama at 500, that's 5,000. I mean, at 200, I bought at 2,000, it goes to 5,000. My portfolio is 5,000. Then now, Kusama has dropped 50%. My portfolio is 2,500. If I buy another 10, which is another 25, what happens is by the time Kusama gets back to his recent high, what I've done is I've doubled my portfolio level by 2, because what I've done is I had one that I bought initially at 2,000. I have another one now that I bought at 2,500. So by the time, so I have 20. By the time I get 5,000, my portfolio is now 10K. So as a long-term investor, dollar cost averaging helps you to increase your position when the market drops. So people always get upset when the market drops. But you need to realize that it's a normal market behavior. The market's always going to drop, and it doesn't need to give you warning or notification. You can only trade what's before you. So if the market presents a drop, take action. If the market sells high and you feel that you've made comfortable profits, and you've reached your targets, take some profits. But if not reach your target, then don't fret, especially if the context and the overall trend is still holding true. So for people getting upset that my portfolio has gone down by 40%, well, where's your expected target? So if your expected target is that your portfolio is going to be 300% of what you invested, then why are you upset about 30% drop when it's still going to get to 300%? So you need to put this in perspective. So for me, I think we're going to have a fabulous alt season again. So we've had like wave 1 of alt season. I think there's a wave 2 now that's going to blow out over the next 6 to 8 weeks. At which point, I mean, all the people that are holding their altcoins, I would say you can sell your altcoins to whatever you want, whether to your fiat currency, or you can take profit, or whatever you want to do with your altcoins. But before then, I don't think it makes sense, because I think this is going to be the biggest altcoin boom for this year. After now, I think we'll have some significant Bitcoin gains before another market correction. Then the altcoin boom that we'll have after that will not probably be as big as the one we're going to have now. But that's that about the market cap. Just a little word about. I'll talk about Bitcoin dominance, and I'll talk about the chart itself. So on the 4-hour, you can see that we pretty much went as low as 47,005. That was the low we had. And what I was saying was, just to put it in perspective for those who didn't join earlier, what I was saying was that from the tip of the market, when we got to like 65K, to the bottom, 26%. We barely did 20. Let's drag it out. We barely did 27% drop. We didn't reach 30% drop from the top of the market to the current bottom. So that's why I said I think 44%, 44K or 43K can still happen before the end of the day, and it won't be out of place. So in a way, the market is just behaving normally, because when you look at this, so we've had this peak at 65. Now we've had this trough at 47. The most we can have is one more day, which I doubt, because it's weekend now. There's no institutional big money to sell on the market. So because we don't have people shorting the market significantly over the weekend, I think the price will have the opportunity to recover. So here's what I'm saying. On the daily, we are oversold. We're getting close to 30. Anything below 30 is oversold region. So on the daily, we already created a long bandwidth for ourselves to go up. Knowing Bitcoin, I don't think we're going to go up. I think we're just going to go sideways for a while, and then after we've gone sideways for a while, then the price will shoot up again. But this particular indicator called Bollinger Band is measure standard deviation of the price, and it's usually more than 80% accurate in determining. So anytime the price touches the low band, if you buy and wait till the price touches the upper band, you always make profits. It's a very simple trading strategy, especially on a long-term time frame. If you are into day trading or swing trading, if you plot a Bollinger Band and the price is hitting, and the price is sitting outside the band like it is right now, you know that it's time to buy. So really, from all indications, the market is saying it's time to buy. Even though, sorry, I wanted to show you Bitcoin dominance. This is Bitcoin dominance as per Coinbase calculation. So we've had over the last, we've had a drop below 50. It's rebound now to 51. I had a plot of Fibonacci that I had on this chart because I restarted my system. I've lost it. But what this is showing is basically that the Bitcoin dominance has tried to retest 52% and didn't succeed. And right now seems to be going back down. So as long as Bitcoin dominance is below 60%, essentially, altcoin season is in play. So there's no cause for alarm, generally speaking, because altcoin season seems, even though all the values seems to have dropped, because most all the altcoins values are tied to Bitcoin, the altcoin season is clearly still in play. In terms of our greed and fear index, I was telling you last week that we're sitting at extreme grade, despite the fact that the price was at the cheap. Yeah, the price was 62 or thereabout then. We're not gotten to 65 at the point. Now we're back to 55. Like I say, anytime you see this ticker coming close to middle or going to the left hand side is always a good opportunity to buy, because when people are afraid is when it's a good time to buy. I know it's counterintuitive and it's not in our nature, because our parasympathetic and sympathetic nervous system are built to protect us from danger. So when anything is saying danger, our natural instinct is to fight or flight, run. So, and run is the first instinct actually. Fight means you need to condition yourself to be prepared to take on whatever is causing the fright. So the natural instinct is for you to run if you see trouble. I mean, especially as a Black person, you're not going to wait to find out what it is and try to be a superhero. You're likely to want to run first. But what I'm saying is, don't run. That's the time to take action. And it's a learned behavior. I don't think anybody comes to the earth with it. It's the same way people who work in the ERs, who work in the emergency room, they sprint to action when they see blood. That's their nature. It's, when you are cringing and you're freaking out, it's almost like that's the time the adrenaline pumps in, because over time their brain has associated carnage with action. So anytime there's carnage, you see them spring into action. So in the same way, you need to sort of train your mind that anytime there's carnage on the markets, that's the time to go in for the spoil. I won't say more than that. On the technical gauge as well, we also have a sell signal. When you have a sell signal on this technical, which rarely happens in a bull run, it means we're even in a better buying position. So last week, I was saying that we were neutral intraday, and that I've not seen that in a long time. And now we're sell. When we're sell, I mean, it's buy for sure. Of course, when you get to strong sell, it means there's no doubt the market is going to pull a strong reversal. And people need to keep in mind. So I'm going to talk about market cycles next. People need to keep in mind that we're in a cycle determined by the Bitcoin halving. And that cycle is the cycle of supply for Bitcoin. It's a deflationary cycle that we program into Bitcoin to halve its production every 4 years, or 100,000 blocks or something, or 10,000 blocks, I can't remember. Because of that, the market has major cycles that are defined by this. Now, knowing these major cycles help us to place our decisions in context. So, for instance, in a civilization like United Kingdom, the prime minister has a tenure. In the US, it's 4 years. If somebody sees that he's going to have only 4 years to execute his agenda, then he's going to structure his decisions in such a way that if he wants to run for another 4 years, then he has enough decisions that he will make to support his re-election. If he sees that he doesn't have another 4 years, that this is the last term, then he will reach for longer lasting impact or things that he wants to be remembered for. He will be going for legacy as opposed to scoring political points. I'm using politics because most of us, I think, can relate to politics. So if somebody is running and it feels like maybe in a country like Nigeria, I know it's not a perfect example, but if he's running for governor, the first time he will try to do some things to earn him some accolades that gives him the opportunity to run again. That's overall helicopter view or context gives him the ability to take the right decision. And what I'm trying to say here, that the Bitcoin cycle gives us the context around which the behavior of the markets runs. Now, that context says that after each cycle of halving, the prices move up into the halving. Then after the halving, it's a slight drop in price, and the price seems to go sideways until 9 to 10 months after the halving. Then the price starts to go up. It has repeated itself in the last 1 year, just as I've described. So right now, why are we in the face of the market? I think we are the real phase of the market. Reason being that everybody's talking about Bitcoin. We've not gotten into euphoria because it's not the highest thing that's showing up on Google now, and the price has not really been going up dramatically as it had been earlier in the year. But you need to realize that at some point we're going to get here, which is euphoria. At which point you need to take your profits. You need to determine what you're going to do with your profits, and you need to pre-plan because, like I say, plan. You need to, and well, it's a general saying, it's almost a cliche. Plan your trade your plan. In the same way, plan your investment and follow your investment plan. So if your investment plan is I want to accumulate Bitcoin and I'm using altcoins to accumulate Bitcoins, then you know that at some point in the cycle, there'll be the point of diminishing returns for altcoins against Bitcoin, at which point you need to sell your altcoins to Bitcoin. If it's just to, largesse for the year and have money for vacation and maybe finish your mortgage, then you know that once you've achieved that, you take out your money and enjoy. But if it's for a long time, you say, okay, I want to keep my Bitcoin for a long time, then you execute your plan accordingly. But right now, you need to realize that even though it seems like we're here, like we're going down on anxiety, no, we're still on this side. I can tell you for real that we're still on this side of the curve. We've not reached the highest high yet. All indicators on chain and off chain suggest that September 2021 is the peak. Knowing the market can decide to go to the peak 6 weeks or 8 weeks before that time, or push the market beyond September before crashing. Nevertheless, one thing is important: know what your plan is with the investment and follow the plan. And I mean, regardless of what the market is doing at that point, you can just follow your plan, and you'll be happy you did. But for a longer term, and like I said last week, if you're thinking, I mean, if you're like me and you're over 40, you're thinking long term and you're thinking, okay, what's my retirement strategy? I think for the next 10 years, I think Bitcoin is the best retirement strategy. I'll talk about that in some other series, and I think I've mentioned it in times past. But for now, I think it's the best one. There's no assets that is outperforming Bitcoin, generally speaking, not in the last 10 years, and pushing forward into next 10 years. The only assets that will probably outperform Bitcoins are some of the major altcoins that we have right now. But that's the story for another day. So we're still here. We're still at the trio, even though we've had a significant drop before getting into euphoria. We're still at the trio phase. Talking about the crypto drip today, which is the knowledge sharing, I was going to talk about the cycle. So I've talked a lot about cycle in the course of today's broadcast. But I have two slides that I'm going to explain to show you where we are really and why the market is behaving the way it is. One, this chart that I'm presenting to you right now is a correlated chart of the 2016, 2012, and 2020 Bitcoin halving. I've explained the concept of halving briefly earlier on. It's the deflationary algorithm that sits within the Bitcoin blockchain that helps it to reduce supply every 4 years. Now, when you have that halving, so when you pick it from halving, so this is picking from halving now, and it's scaling each of the various years. So the first one in blue is the first one in light blue. I don't know what this. I think this is electric blue or lemon. I can't remember the name of this blue. I know they call it some funny name. I can't remember. I'm not going to try to guess. But the ladies know this color. It's a special kind of turquoise blue, I think, something like that. So this one that has a strange blue color is the halving mapping for 2012. And what you see here is that after the halving, price goes a little bit up, then it scales up rapidly. Now, if you bring in the next one, so that's 2012. If you bring in the next one, which is 2016, that's the dark blue one or the navy blue one, you'll see that it follows almost a similar trajectory. It's not exactly the same, but it continues to shoot up after the halving before plateauing. Now, when you pan the red one, which is the current halving that happened in May 2020, with these two, what it shows is that this correction that we're having is the same. It's almost like it's happening around the same time, somewhere in between the 2012 and the 2016 halving. That's why we're having this correction. And what we see is after this correction, you see a supernormal price hike. So after this correction in 2016, we saw the price go up astronomically, like I think 1,000%. Same thing for the one in 2012. So the extrapolation based on this is that when this price starts to go up, you can expect the price to sit anywhere between 100 and I think 500. Don't quote me, but that's what the indices are saying, and it's almost like a self-fulfilling prophecy when very large time frame indices point to particular numbers. So, like I used to tell people that many of those analysts on Bloomberg or Forbes, any of those institutional hedge funds, BlackRock, Grayscale, they're not picking the figures out of the air. They're using heavily extrapolated data with all sorts of algorithms built in it. And so when it stretches out the data and plots it, most of the models come up with price predictions that are not just guesses. They are most likely where the market will go. And once people begin to see that the market has the capacity to go to that place, naturally speaking, the market gravitates towards that. So in terms of where we are, we are close to that peak that we have in 2016 and the one we had in 2012. So from this king, we can expect that we'll have an upward climb all the way to the peak of the markets. But that upward climb might not be direct like the ones that we have here. It might take a while, but generally speaking, we can expect that climb to start happening anytime from 4 to 6 weeks from where we are now. Now, the second one that I wanted to show was the history of corrections based on the weekly chart. And I think I've shown this before. I can't remember when much, and I showed this before at some point in time, how the market behaves after correction, and how far it goes up. So if you look at this 2016 one, the first correction did a 38% drop. Then from the trough to peak, did a 138% gain. Then another 38% drop, then another 106% gain, another 33% drop, then you had a 200% gain, a 38% drop again, then 164% gain, then another 36% drop, a 117% gain, then you had a 29% down, then you have a 238% gain. That was the last bull run. To be honest, we've not even had, we probably had like 2 or 3 drops. Nothing significant in terms of drops over the course of the current bull run. So whatever we're having now is minimal compared to what has happened in the future. And the past, sorry. What that tells us is that we're likely to see more corrections. But before we see another correction, we expect that we'll see at least 100% or 200% gain before any significant correction in the future. I think we've done with time. I'll stop now. If people have questions, please unmute your mic and ask your questions. If you're on Zoom and have a question, and just type in your question or ask a question. Otherwise, if you're on Instagram, just type in your question. I'll read it out and I'll answer it. That's all I have for today. Thank you. So let me have the questions if you've not already sent them. So for the guys on Instagram, I'm going to read out the questions that have been asked, and I'm going to just go over them again. So somebody asked, can one sell high and later use the proceeds to buy low? Another asks, how can one determine the high and the low price? Another asks, what do you think is happening to KSM? Any signs of it moving back up soon? Then somebody else asks, KSM is almost 50% drop. Okay, no, that was just a statement. So for the first one, the first question about um, yes, what you can pick from tonight's class is you should relax. You don't need to get stressed for anything. Not at all. Nothing to be stressed about. Normal market behavior is going on. So there's nothing to be stressed about. If you're going on the Nigerian road and went into a pothole, are you going to freak out? Simply, I mean, even here in England, you're not going to freak out if you run into a pothole. Because yeah, they come to fix it from time to time. But yeah, I'll still be potholes here and there. So are you going to freak out on the journey because you went to a pothole? If the pothole did not break your rim or your wheel or bust your tire, then there's no point to freak out because it's expected. You're expected to have some bumps along the way. Yeah, definitely. The path to profit is still very, very, very intact. And I mean, I've traded in currency markets before touching crypto, and I can say that crypto is a lot much better because there is so many information that you will never get. In fact, before you can get those information, if you are trading currencies, you have to be an institutional banker or be paying an institutional banker to give you the info. The kind of information we have on cryptocurrencies, I'm telling you, is the sweetest spot to be if you're a trader because the information is available. If you subscribe to on-chain analytics, you will get the information you're looking for. And if you have the on-chain analytics, it tells you everything you need to know. It tells you where the momentum is. It tells you what the market is doing. It tells you where you are. What we are seeing based on on-chain analytics, like we're on a local top. A local top means the market is tired of going forward. It wants to rest. Once he has finished resting, he will continue his journey. So nothing to worry about, Josie. On the question of selling high and using the proceeds to buy low, yes, that strategy exists where people say, sell half of your profits, wait for when the market corrects and buy low. It's a good strategy to increase your holding, but at some point, it means that you need to be there to attend to the market condition. If for whatever reason you're not available when there's a market crash, then you don't have the opportunity to buy low. And it's only applicable as long as the market is still in the bull run. If the bull run is coming to an end and you sold, you want to buy low. If you buy low, then the market goes lower. How are you going to know when the market is going to correct? That's the caveat to that strategy. How can you determine the high and low price? I have trading courses that actually talk about fundamentals of trading that can help you with determining high and low price. What do you think is happening to KSM? Simple correction. It's done almost, what am I saying? It's done almost 200% since January. So if it's correcting and taking 50% off, I think it's fair. It's fair. I think it's fair. It's not abnormal behavior for any asset or commodity. And you should expect that when the market makes gains, naturally, it's almost like human psychology. Think about it this way: when the market is going up so high, people are making profits. Different people have different targets on what profit they want to take. So as people are taking profits, they are selling. As they are selling, the price is coming down. So when they sell, the price comes down. Now, the price coming down doesn't mean that the price is going to go flat. No, it just means that people have taken profit. So in the same way, when we got to 65K last weekend, which was a new all-time high, it means everybody that bought Bitcoin before last Saturday was in profit, including the miners that were mining that day. So the miners decided that, okay, we've accumulated Bitcoin for the past 4 weeks. We've not been selling. Now that we have some profits over our Bitcoin, we can sell our Bitcoins. They sell, the price drops. And because the spot the Bitcoin market is quite intricately intertwined. So in terms of price movers, and I think I mentioned it a week or two ago, you have the miners, you have the market makers, which are the big exchanges, who also have a hand to play in the derivatives markets. So when anything happens, then you have the retail traders. When anything happens in anywhere along the chain, you can expect that uh, there will be a domino effect. So I'm going to take the last two questions I've seen. Chinelo's question says, you said Bitcoin Euphoria will be around September. I hope you will have the class for those that want to hold long term before then. So the class the class in May 14, which is portfolio management, addresses both short-term, medium-term, and long-term portfolio strategies. So definitely the class in May on May 14 will address that. Obi's question is, please, what trading platform is better, Binance or Crypto.com? I've just realized that Crypto.com inflates the market price when you are purchasing and also sells significantly lower than the market price. Well, I think we had that discussion privately, Obi, when I told you that if you see a low price on Crypto.com, it's because they're doing a promo. Usually, the advice is have multiple exchange accounts. For obvious reasons. One, because they might not have some of the coins that you want at that particular time. They might not list it. Second, because they might be offering promo that might make them attractive. But I used to be a very huge fan of Crypto.com until they dumped on my investments with them. So I just left them silently and went to Binance. Currently, Binance is about the most liquid of them all. For anyone outside the US, I'll say have Binance and have Crypto.com. Crypto.com has a very friendly user interface. Coinbase Coinbase is almost as expensive, if not, in fact, it's more expensive. Let me not say if not. Coinbase is more expensive than Crypto.com. There is also KuCoin, even though KuCoin is an Asian exchange. So if you're a newbie, you can just stay with Binance. Well, if you are you can stay with Binance and Crypto.com. But if you are fairly savvy, you can move to additional exchanges. If you're in the US, there's Kraken, there's Gemini, there's Coinbase, there's Binance US, and there's KuCoin US. Those exchanges are restrictive in that they're not going to allow you participate in the DeFi coins and new innovative coins. Well, I've told the guys in US, if you can find 5 people, I will take you the class on how to go about it. Legit. But I can't take the class if we don't have up to 5 people. So if you have people in the US who are interested, I need 5 people to take the class on how to get around that. Then the next question I have was, so can we say there was really no major news that can be attributed? No, there's not. It doesn't. You don't need a major news for a market crash. As I've explained to you, you hit a new all-time high. What it means on the net unrealized profits on the blockchain analytics is that when you hit a new all-time high, everybody that has bought Bitcoin up to that time is in profit. So somebody is going to sell. It's just natural. Somebody is going to sell. When you hit a new all-time high, somebody is going to sell first. It might be because they want to cash out before other people. Or maybe they just felt that, I've held this Bitcoin enough. I have enough profits. So the miners are incurring costs by participating. If you need to see the mining rigs, they are very energy intensive, but they always need to cover their costs. So right now, most of them are in Asia, where they need to cover their costs currently. In the future, I don't think we're going to have this drop because, one, I think that the market will be much more liquid, so we'll be in multiples of trillions. Two, many of these mining operations will be bought over by American investors or Western investors, meaning they won't have to use the Bitcoin as operating expense. If you get what I mean, they won't have to use their Bitcoin to cover their cost as a business because the companies that have acquired them will be providing them money to run the operating costs, and then they will keep the Bitcoin and be using the Bitcoin as leverage instead. So, but for now, anytime you hit on an all-time high, you can expect that there will be some price correction. How about, I see your hands up. Ask your question.
Yes. Good evening, Dr. Demi and
Evening,
everybody.
Yeah.
My question is talking about cashing out when the time comes.
Yeah.
I've seen some of the exchanges that trade directly to some of these fiat currencies. So, in cashing out, is it possible that Cranky, for instance, you can transfer your assets there, sell it into fiat, either USD or something, then probably cash out in USD. Is it possible to do that?
Yeah, of course. I do that, well, I don't know. I do that all the time. You're in Ghana, so usually I think there are two ways you can do it, especially in Africa. I'll take Nigeria as an example. If you need cash out in Nigeria, as if you don't want to use anybody in the circles, like want to do P2P with many of the guys in our crypto circles, you can just go to the P2P section of Binance. They are always willing buyers and willing sellers at all times. So they will credit your account with the amount of USDT or Bitcoin that you're selling. And then once they credit your account and you confirm that they credited your account on the platform, your USDT automatically gets moved to them. So you can choose to cash out that way. In the Western client, you can choose to cash out by cashing out on a card like Crypto.com card. I understand that Binance is working on credit card with Swipe. You can choose to use that as well. So there are multiple strategies to cash out. Or you can cash out to Bitcoin and just move it to a decentralized wallet if you want to keep for the long term.
Okay, understand. Thank you.
Yeah. Any other question before we call it today? I think I have one other question. Somebody was asking me before the meeting started, and was saying what are the coins to buy. My broad answer would be that really any altcoins you buy now is going to be profitable, and I will explain to you why it's going to be profitable. Just showing this chart. So let's look at altcoins. Let's start from let's even leave the heavily capitalized one. Let's start from number 12. So look at this. This is Chainlink. Chainlink is 17% off its recent high. VeChain is 6%. In the last 24 hours, 11%. Stellar Lumen is 10%. Theta is 11%. Tron 16%. 10%. If we go to DeFi or NFTs, which are like hotspot coins, so if you go to DeFi, you even see bigger drops. So you see 12%, those are the heavily capitalized ones. If you come down the rank, you see 13%, 14%. I mean, these are huge discounts because from where they were before, they've made, this is, Kaiba is 30% away from in the last 7 days. So these are not only, these are very strong DeFi coins, by the way. Algo is 42%. All this, red percentages are percentage discounts. Badger DAO is 45. Wow. 45%, 41%. These are huge discounts, to be honest. So if you ask me, any altcoin that has done more than 20% drop in the last 7 days, it's fantastic to buy. Or if you're interested in NFTs are also very hot, please. You can see, Chile is 36%. Even Engine there was the top of the range. Engine is doing almost 30% drop. So these are fantastic buy opportunities across board for all altcoins. It goes without saying that this opportunity will not come anytime soon. So for that person that asked me on the WhatsApp group, the world is your oyster. the world of altcoins is your oyster. Buy as much as you can because definitely they're going back up. With that, I think we've come to the end of today's session. Thank you to the guys who joined on Instagram, and thank you to everybody on the call. See you again next week. Hopefully by that time, your BP will have come down.
Thank you.
And your heart will have stop doing kiss. Have a nice weekend. Don't look at your portfolio. Just look away from the portfolio for the weekend. Enjoy your life.
Thank you so much, Dr. Demi.
Market to come back. Don't worry. All right, guys.
Thank you,
care.
Dr. Demi.
Well done.
Thank you.